The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve. Thank you for taking my call on this one and to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes. And last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the October 16th. Terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should not be prisoners of our past, but instead pioneers of our future. So let's do everything in our power to be pioneers of our future today. Of course, one of the best ways that we can do this is to remember there's nothing more powerful than the power of presence. And I want to thank you for the gift of your presence here this morning. I'll do all that I can to assist you in helping to identify where prices are headed. We'll take a look at the commodity market, the futures markets, the index futures, the currency markets, and anything else that you'd like. That means I'd love to hear from you. Just pick up the phone. Give us a call at 877-927-6648. Internationally, that number is 727-445-1044. Then you and I, we can go on a safari. We can go looking for bulls and bears. It is Terrific Thursday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow Futures. They're off about 137 points, trading out at 15,869. NASDAQ off 45 points, trading at 3707 and change. ES down about 21 points, trading at 1826 out here. King Dollar only up a nickel as we speak, trading out at 85.30. Gold back $7 right now, trading at 12.37. Silver off 23 cents. She's trading out at 17.24. Light sweet crude down $1.14, trading out at $80.64. A quick peek across the globe, we're going to find over in Europe, the DAX is up 130 points, trading out at 84.38. The FTSE down 99 points, trading at 61.12. In Asia last night, of course, a handoff by the U.S. to Asia. You had the Nikkei, it was a sea of red. The Nikkei down 335. The Hang Seng down 239. The Nikkei off about 2.2%. The Hang Seng was off a little over 1%. The Shanghai down 0.75%. It closed out at 24.67. That was down about 18 points. Okay. Where do we begin? Let's begin by taking a look at our futures contracts. Let's go take a look at the index futures, see what we can figure out here. Let's take a look at the Russell 2000. Now, I got a little bit of a delay here, a 10-minute delay. But nonetheless, let's take a look at the Russell 2000. Why the Russell 2000? Well, it's acted the strongest in one sense over the last couple of trading sessions. And the question we have to ask ourselves is why? I like to say that from weakness we find strength out here. If we just simply paid attention to just chart patterns, what we know about the Russell 2000 is that it completed a 1 to 1.272 A to B equals CD to the downside. That A point was up at the top of the consolidation box from July 1st, so it's going to be the July 1st high. The B point's going to be the low on August the 1st. The C point's going to be the high on September 3rd. 1 to 1.272 A to B equals CD to the downside. Made just a slightly lower low than that. That was back on October the 13th out here. Then the candle, let me get rid of this pattern just to clean it up just a bit. So let's just recap where we're at. We take a look at the pattern that was created here between the trading sessions of October 10th, the 13th, and the 14th. Little three-river morning star pattern out there. That says that support is the low of that session on October 13th, 1038.60. You close below that. Says you move down to the next level. What's the next level? Well, we know inside the Russell 2000 there's a 130-point consolidation. That's anywhere between the 1078 to 1211 range out there. It's outside of the consolidation box. When you get outside the consolidation box after you've tested it and you rejected it, you're typically going to make that measured move equal to or greater than a consolidation. It's a beautiful pattern out there. What do we see yesterday? Yesterday wasn't really even able to pierce the low from October 13th. That was when the market was just absolutely cascading. We're looking at the futures contract out here. So in a sense, that's somewhat bullish. The question is, over the last 2 days, this is really what I posed to subscribers in my newsletter service, Mastering Probability. With the liquidation event that's going on out here, do we just simply see some of the best trades here, which has been short the Russell 2000? Do we just simply see those trades come off just simply from a liquidity event? And I don't know the answer to that. What we do know is this. Inside a consolidation, if price were able to get back into the 1078 level, above 1079, let's call it out there, and you prefer to see it with a wide range of bar, I'd have to say above 1086, right? We've got the daily market profiles out here, so the point of control, the area where you've got both the buyers and sellers just kind of hanging out is 1086. You don't want to see it get up to 1086 and then drop back down below the consolidation. But if you can get above 1086, then maybe there is some oomph into the Russell 2000. I will tell you, inside any market rally, you want to see the Russell 2000 leading the charge, the upside. In the last 2 days' action, they've been able to come from behind, and they're basically in like maybe second place right now. So another strong day in the Russell, and then they could start to take over a leadership group. If, in fact, you were to see some kind of bottom. And I don't know that we're going to see that just yet, but I'm just saying if we're going to take a look at both sides of the trade out here. And if we take a look at the Russell 2000, we go from that swing point high down to the low out here. By the way, the swing point high I'm referring to is on September the 3rd. You know, your dead cat bounce, your 0.382 retracement, 1095. So if you're bearish and you see price get above 1095 inside the Russell 2000, what that means is that you're likely to see price move up into the 1131-ish type area inside the futures contract, and that may not be the kind of pain that you want to have in place. At this stage here, I don't see any real reason to not be short, other than you've had a couple of strong messages over the last couple of days out here. And this morning, we take a look at the futures. Looks like the unfair low, the 1045 level, has also held as support. So that's what's going on inside of the Russell 2000. I'll show you another pattern. You know, yesterday after the market had closed, I went back and wanted to take a look at, hey, where did price stop? Why did price stop where it was? All right, and I started taking a look at the index ETFs out there. I always look at the index ETFs. Of course, I look at the index ETFs for a couple different reasons. Number one, capitulation lows inside of the Qs out here, those are made with high volume. They have been for years and years out there. It's a different way to take a look at volume. If we take a look at the QQQ, just as an example here, and you take a look at yesterday's volume, 108 million shares out here. Now, it doesn't always necessarily mean to the day, but it is something that you absolutely want to be paying attention to. Last time we had volume like this happened to be on April the 4th. Volume there was 131 million shares, so higher than what we saw yesterday. You know, does it make any difference that it was coming down into that candle session from April the 4th? I don't know whether it does or it doesn't, but nonetheless, we didn't see the actual low come in until we saw a reversal signal, and that took place out here. It was a key reversal session on April the 15th. However, there are other times where we can come back. We can take a look at these high volume lows, and we can identify those as making the exact low. October the 9th, 64 million shares out here. So we want to pay attention. You got the relative strength indicator down at the oversold level. So the market on a daily basis is oversold out here. We take a look at retracements. We take a look at retracements inside of the Q. So high volume shouldn't scare you and shouldn't get you too excited from the bearish standpoint when it comes to the Qs. And I know I have my theories as to why it works. It doesn't really matter about what the theories are. The question is, does it work? Is it going to continue to work out there? I don't know whether it's going to continue to work, but until it really fails out here, it is a message of a bottoming pattern that is out there. It has been in the past. It is likely to continue to be so. Now, The 0.618 retracement level inside the QQQ is $89.88. The actual low yesterday was $90.24. We'll see if that 89.88 level gets hit this morning. If I take a look at the QQQ, let me see, where is it actually trading at right now? It looks like 90.72 is the number last trade firing off out there. So it's not even all the way down there. It doesn't mean that we won't get down there. But that's what's going on inside the Qs. Now, this is kind of interesting here. Well, where am I going to actually? Okay, yeah. Is this it? Yeah, this is it right here. So I'll show you this chart. And this is the chart here. Here we go. We're going to take a look at the ETF structure. Now, the ETF structures are always going to be slightly different than the indexes. The reason is these ETFs, the diamonds, the SPYs, the IWM, they've got to account for expenses. They also are adjusting for dividends that are being paid out. So their trend lines are going to be slightly different than if you were to take a look at the cash S&P. If we take a look at the if you're watching us on TigerTV, and I hope that you are, if you're watching us on TigerTV, thanks so much for doing that, because you can see their charts. If you're listening on the radio, your mobile device at TFNN.mobi, we appreciate that very much. The archive of this show is on Channel 9, so you can get it there. You can watch you can see this chart, and of course, we stream live to your mobile devices or your they don't have to be mobile. I don't know. You call a pad a mobile device. I suppose you can these days. And so we stream live. Just go to the homepage at TFNN.com. Upper right-hand side, you'll see that button. 3 little smartphones on it. Click on that. The show will stream live. Now, a lot of people are talking about the trend having been broken inside of the market out here. And I don't know what in the heck they're looking at when they look at charts. Now, maybe they're looking at short-term trends, so okay, I can get that. But a lot of folks are saying, this is why I say do the homework yourself out here. So a lot of folks are talking about the trend having been broken. Yet if you go back and you take a look, now here's the interesting thing. So I've got a couple different trend lines out here on my chart. If you go back to the time frame of October 3rd, 2011, and that's where we made some significant lows out here inside the market. If you go from the low, if you take a look at the diamonds, which is the top portion of my screen, the spiders, which is the center portion, the IWM, which is the bottom portion of my screen out here. If you go and you take a look at the red line, these are good red lines, you can see that that trend has not been broken. Yesterday, what was interesting, if you took a look at all 3 of these ETFs, was price stopped right at the trend line coming off of that October 3rd low out there. I thought that was pretty interesting. I think you might find that pretty interesting as well. That's just a really kind of a short-term trend. If you go all the way back into the March of 2009 timeframe, of course, that trend has not been broken, not even close to having been broken. If this area here fails, though, I would have to say that that is likely where price would move down to. Where would that be? Inside the diamonds, as an example, the long-term trend out here, probably right around the 146-ish type range. Inside of the spiders, inside of the SPYs, probably around 154, much larger drop. And inside the Russell 2000, probably in the $91 area or so. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 138, S&P down about 20 right now, trading out at 1826. So 9:24, we've got 6 minutes or so before the bell opens. And if you would ask me, what is it that I'd like to see out here? Some type of potential confirmation of a bottom that would be put in. I'm going to take a look at it. I'm going to put up on my screen here the 5-hour energy chart, the 300-minute chart for the S&P futures. If we take a look at the S&P futures right now, what you'll see here is you'll see the low that was put in yesterday. That was 19. Whoops, come on. That was at 1813, right? Yeah, 1813 was yesterday's low. And at the very bottom of my, let me see if I can move this stuff up here just a bit. Let's expand a couple of things up here. There we go. So we can see here on the bottom of my screen on the 5-hour chart. I probably should just get rid of the volume on this, but we'll just leave it right there. You can see as price was moving down, that relative strength indicator got down to a level of... I'm going to tell you in a minute. I just don't have it. Where's the not that no. Show data box. There we go. Okay, I just got to show my data box out here. So we got down to a low reading of oh, good Lord. 32. Let me make sure that's right. No. At 22.42. So pretty good low reading here. So I'd like to see a push lower this morning, preferably 2 points or more. So somewhere around 18.11. Anything south of 18.11 would be good. And then we see a lower relative strength reading, getting a price Rhodes momentum indicator reading, meaning that there's not enough energy left to push price down. And that's what I'd like to see, because on the 3-hour chart out here, the 5-hour chart out here, I'd like to see that push. That would also go ahead and give us that the potential seventh wave count to the downside out there. And then what we'd like to see is we'd like to see price pop right back above the 1821 level. That is the market profile low out there. So that is ideally what I'm looking forward to. If I'm looking at these charts, trying to come up with any indication, are there any potential patterns out there that could assist us in identifying whether there is a potential bottom in place? So that is the one that I'll be looking for. Now, that's a 5-hour chart, so that means we really have to go down into something more intraday to see what's going on. If I just take a look at a 30-minute chart here for the ES out here, looks like I'm not sure what I've got going on. Let me just take a look at no similar pattern at the moment, meaning a price relative strength divergent pattern out there. But again, that's what I'm looking for. We'll see if in fact the market goes ahead and provides us with that gift, or if it just simply crushes its way through and continues its momentum to the downside. You know, there's been a lot of folks that have been talking about the price of oil. And how the price of oil is correlating to what's going on in the market, as if that's been the cause of it. You got light sweet crude trade at 80.67. It's down $1.11 off 1 3/10%. But what's interesting, if you're watching this on Tiger TV, on the upper portion of my chart here, I've got the S&P futures contract. So that's the blue squiggly line going across my screen. And the bottom, it happens to be light sweet crude. It's a continuous contract. Both of these are weekly charts, by the way. Just gives you more data. And part of that more data was to be able to say, hey, do you see a correlation here inside of the direction of the S&P futures and light sweet crude? Now, if we take a look at light sweet crude and see what it's doing, you'll see a couple of horizontal lines that'll pop up on my screen out here. What I see light sweet crude doing as we speak right now is, in essence, trading in a consolidation range. That consolidation is somewhere between the 79.25-ish range, somewhere right around there, and 111. So you got a nice 31, 32-point consolidation range, and price is just moving right now into the bottom of that consolidation. That's in light sweet crude. If I take a look at those same time periods here, geez, unfortunately, it's going to turn out to be in. I'm going to turn this. I'm going to turn the ES Mini into a different color out here. That way, it. So let me see here. I'm going to turn that into. I'll turn that into a nice. Let me see. How's that look? A nice little. What is that? A chartreuse pink. We'll call it pink out there. So we'll call that because probably it is pink. And we'll take a look at that line. And if we take a look at, I just come back to the same swing point, in essence, the same time period out here with regard to the ES. And from the bottom side, as well as, there's no consolidation pattern out here. So, yeah, maybe there's a directional correlation out here, but I wouldn't get too hung up into what our markets are doing and necessarily light sweet crude out there, because I just don't see it. Maybe you see it out here as you take a look at my stock chart. But it's always good to do your work, to do your own work out here, as opposed to just buy in to what everybody is saying. Hey, that includes me as well. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 179, trade out of 15,967. S&P off 23 at 1839. Composite down 64 at 4150. Russell off 13 points at 1059. The DAX is down 120 points. The FTSE down 91. Goldilocks off $6. Silver down 20 cents. Leading the charge, the downside out here, and I mean leading the charge. Netflix, NFLX off $105, down 23% as we speak. Google off $10, down about 2%. That's trading out at 530. Amazon off $6, down 2%. You've got Tesla off $5. Baker Hughes down 10%, off $5. Asperian Therapeutics down 16%. That's off $3.75. Goldman Sachs out with numbers before the bell. They're trading down 2%, off $3.47. To the upside out here, let's see. We got United Health Group, UNH, up 4%, up $3 and change. You've got Las Vegas Sands up $1.58. Chesapeake Energy up $1.55. Chimerix up $1.42 out there. Again, our call number 877-927 6648. So let's see. We took a look at the Qs. We looked at the volume there. We took a look at an ideal pattern. Don't know that we'll get it inside the ES Mini on a 300-minute basis. We took a look at how price had come down to just simply a long-term support line. So if that area holds, it should become of no surprise to folks out there. The trend has not changed. The trend has not changed as of yet. Of course, it always depends on what trend line it is that you're looking at out there. I say go back and take a look at that trend from October of 2011. Put that on your charts. And then pay attention to what happens at that line. Now, let's so what have we not? We looked at the volume inside of the Qs. Oh, we didn't take a look at the summation indexes out here. So yesterday, I made a big deal about this. We went back to, we went back 10, 15 years or so to look at this one specific pattern inside the New York Stock Exchange. So even yesterday, by the way, it's a hammer candle that was formed here inside the New York Stock Exchange. So in theory, that low should hold, the break below that low. And of course, if you're long, you're wrong. At least that's the expression that Stevie likes to use out here. The low yesterday inside the New York Stock Exchange, 98.86, I believe, at 98.86.07. But I think what was more interesting to me when we took a look at yesterday's push inside of the market, still did not break, did not pierce that little rising price oscillator that is formed below the zero line. That's the green horizontal line on my screen out here. And it carries with it just one simple message. You're going to see until this pattern here fails. And the only way that we see this pattern fail is an absolute continued push lower and participation by more equities inside the New York Stock Exchange, a wider swath of the market. That pattern has not occurred just yet. And what we have seen out here is we've seen significant bottoms that have formed or significant areas of where a bounce has occurred inside of the New York Stock Exchange. So yesterday, what did we get? We got hammer candles inside of the New York Stock Exchange. If we take a look at the New York Stock Exchange right now, let me pull this over here, and let's take a look at this. Here's the NYSE. Well, let me do this. Let me do this for a moment. Just give you a moment off to the side to get something going for you. That way, those of you that are watching us in HD out there, you'll actually see the different bullish and bearish candles that you want to focus on or pay attention to. So give me a moment. I'm just making a slight modification there. Come on, baby. Come on, baby. Okay, there we go. So here, and I don't know how well it shows up on your screen out here, but we did have a nice little hammer candle that was out there. You're in the fifth wave of potential 7 waves to the downside inside the NYSE out here. No other real patterns to speak of, but we did have a hammer candle, and that is important. In fact, I thought I had something somewhere else. Son of a gun. Where did I put that as I searched my screens out here? What I was going to do is I was going to take a look at the other. Let me give me one moment here to do one more thing out here. What I want to do is just take a look at hammer candles, and we'll go back and see the importance of those hammer candles inside the NYSE. So give me a moment to do that. Another quick change over here, and that way it's going to help us to understand just how important was yesterday's candle session out here. Let's put this. There we go. Okay, so now we're back. We're going to take a look at the New York Stock Exchange. We're going to go back and we're going to just simply, this makes it a little bit easier for me to search for the hammer candles. Make sure we take a look at each one. So we've got a nice little hammer candle. It's a reversal signal yesterday. If we take a look at the last time we saw a hammer candle inside of the New York Stock Exchange, it happened to be right back here on April the 15th, 2014. Of course, we know on April 15th, 2014, that made a fairly significant low in the marketplace. Now, unless the low gets taken out, then you'd have a failure out there, and you'd be looking for lower prices. But it's a nice one-day reversal. Oh, I know what else I need to do. So one more thing I've got to do off the screen here, because I want to give you loads of data, right? So I want to make sure that we're looking at all the data that we possibly can. So let me just change my data series. We'll go back like about 3,600 bars. So that's about 10 years worth of time, I suppose. And we'll go take a look at those hammer candles inside of the market. So let's go take a look at it. Now it's all populated. Okay. Here we've got all the hammer candles inside the NYSE. So the last one, as I say before, yesterday's, that took place on April the 15th. Now, as we come back further, as we scan back through here, we're going to see hammers that have failed, most certainly. Now, yesterday's, what I want you to pay attention to yesterday's big, long, big hammer candle out there there, and they have more meaning than smaller ones. If we take a look at the one before April 15th, a small little hammer candle that took place here on September the 27th, and that failed the very next session, went down, made a retracement out here. So there's another hammer candle inside the NYSE. You don't see a lot of them inside the New York Stock Exchange. Off of the highs that took place here back on May 22nd, 2013, 2 trading sessions later, you saw a hammer candle. That finally failed. You saw price make a 100% move by getting back into the February 2013 swing point area. Let's keep going back. Let's look for different hammer candles that might be out here inside of the NYSE. We had a little hammer candle that failed right here on May 8th, 2012. As soon as that failed, price went ahead and formed an A to B equals CD to the downside. If we take a look at that pattern out here, the A point, the B point was down here on April the 10th. The C point was there on May the 1st. It made an exact 1 to 2 A to B equals CD to the downside before that actually failed. We'll go ahead and take that off of the screen out here. Let's look for additional hammer candles inside of the NYSE. We saw a hammer candle right back here on September the 12th, 2011. This was when we were going through a period much like what we are seeing taking place, in my opinion, here today. Now, the sign of the bottom that really came in, this was back on October the 4th, was as price was moving lower, and this is the same kind of pattern I was looking for inside of the 300-minute chart for the ES Mini. The stage we certainly are not there as we speak, but there's a lot of time left in the trading session out here. But here's where we saw price moving lower, and then we saw this nice little piercing candle that formed with some follow-through on the very next session on October the 5th. Meanwhile, back at the ranch out here, there was a hammer candle that failed on August the 3rd. It failed the very next trading session. Price cream lower. So for both bulls and bears, the trading session of yesterday with regard to that hammer candle session out there, it's very important for us to be paying attention to. It'll give you a really good clue as to what is going on inside of the market. As I say, inside the New York. And we also had a hammer candle that formed out here, I believe, inside of the S&P 500. Let's go put the S&P 500 chart on my screen as well. The S&P 500 also forming a daily hammer candle on it. That says that it should have pretty good support on the cash index down at its low of 1821.12. If you fail there, where is price likely to head to? Well, if we take a look at those A to B equals CD patterns, let's go draw those in here. Your A point's going to be the swing point high from September 19th. Your B point's going to be down here on October the 2nd. And your C point's going to be this retracement up into the October 6th time frame. The hammer candle yesterday formed at the 1 to 1.618, A to B equals CD to the downside out there. That price projection on 1 to 1.618, that was 1826.99, the actual low. And the support level that you want to be watching for on the S&P is going to be down at the 1821.12 level. You pierce that on the S&P 500, then you're likely to move down to 1791. That would be your 1 to 2 A to B equals CD to the downside. That would also get you back into the April swing points. The April 11 swing point low was priced out at about 1814. So 1814, 1791 would be the areas that you would be looking at for support if this hammer candle fails out there. But if it fails and it gets down below April 11th, then price should move all the way back down to the February 5th area. There you'd see a 1 to 2.618 A to B equals CD to the downside. I believe it was just the S&P and the New York Stock Exchange that were the only two indices out there that actually formed those hammer candles. Let's go take a look at, and also, what was interesting here, and I'll point this out because yesterday I had mentioned it wasn't just the New York Stock Exchange that was not confirming the move lower. When I say not confirming the move lower, suggesting that you're going to see a huge trampoline effect out here. So it'll surprise everyone, but it won't surprise you. Now, and what I mean by that is if we take a look at its price oscillator, it just simply has not been making lower lows. It's just simply been going horizontal out there, even as price has moved lower, and that's inside the NASDAQ composite. So we've got two for the price of one out there, two of the significant, because in the New York, the NASDAQ composite, you've got, 3,000 or so traded issues. So you've got two of the wider swaths out here that are suggesting that we're going to see a very healthy bounce. When? I don't know just exactly. That's why I've been searching, looking for different patterns out here that in the past have given us a really good indication of that. And it's been pretty tough to find out here. I was looking at the Dow futures this morning, and the Dow futures, maybe they've given us a signal. On a 30-minute chart, yesterday as it was making its lows out here, it got down and made that seventh wave to the downside, and that took place at 1:30 in the afternoon. No real reversal from that, but as long as that low doesn't get taken out, and here at about 7:30 this morning, we had another hammer candle that showed up on the 30-minute chart. So that's a pretty decent indication of a potential bottom out here. We'll see as price on the 30-minute here right now just deals with its TAS market profile resistance zone right around the 15,950 level. We'll see if price can pierce above that. If we go take a look at some stocks here that are moving and grooving in the marketplace, let's go take a look at those. Then we'll go take a look at maybe some currency pairs, see what they're doing as well. So the Dow's off 140, S&P is down 20. Let's go take a look at Netflix off $103. Let's go see what it is doing, where that thing is trading into. We can forget about the A to B equals CD to the downside out. Well, it's beyond the 1 to 2 level, but let's go take a look at it, see what it is trading into. You've got this little swing point, this little hammer candle of itself. On April the 28th. Now, volume-wise, you've already done 3 million shares, so volume is really not it's going to blow away volumes for sure, or should blow away volumes here today. Let's put this on a weekly time frame, get a better feel on a weekly time frame what Netflix may be doing out here. So if we take a look at Netflix, it's just really trading back into its swing point from a weekly basis. April 28, 22 million shares. You've done 16 million already this week. So it hasn't taken out that swing point. If it does, that swing point low, by the way, is 299.50. You get rid of that swing point. We talked about trends earlier, right? Let's take a look at the trend line inside of Netflix. As we take a look at that trend line out here, it is traveling. How about that? How does that work? So you guys might think that I would make this stuff up. I don't make this stuff up. It's always amazing. That's why, yesterday the market closed, and I'm trying to figure out, okay, so why did the market really stop where it was? And I'm hearing all this stuff on the news, the trends have been broken, this, that, and I'm like, well, so let me go back and take a look at the charts. And then with the great, cool charting package here from eSignal, it's so easy to put up multiple charts and compare one against the other. And when I put up, first thing I looked at was the hammer candle inside the S&P, so I wanted to see what it was doing. And when it came down right to the trend line inside the SPY, I was like, wow, that's pretty interesting. Hey, let me put the diamonds up here. So go ahead and I put the diamonds, inside the same chart with the SPY, and I'm like, son of a gun. So then I said, let me go take a look at the week indice out here. Let me go take a look at the IWM. And sure enough, when I used that, I was like, now how does price know to stop at that trend? Doesn't mean that it's going to stop there, but how does price know yesterday? And it's a free-for-all down there. Hey, can't be just me that was looking at it. I didn't even know, but I didn't even pay attention to it until I started just trying to identify, hey, what is this market doing? Where are the next key levels that we need to be paying attention to? Hey, let me come back here to this chart here from Netflix, because we're doing basically the same thing. I'm just going to go ahead and clean it up a little bit so we can so you can see it more clearly if you're watching this on TigerTV out here, so we can see the chart. And what else? I guess that works pretty good. So if we take a look at it, this is coming off of the trend down here when it made a low back in the weekend of October 1st, 2012, down at about the 84.35 level out there. And I just simply followed the trend up along the bottom here. So prices stopped inside of Netflix. It stopped right at the trend line out there on the weekly basis. Yeah, it's hammering away with big volume, but kind of interesting how these trend lines certainly can work for you out there and help you to project that price. Right now, Dow's off 117, S&P down 17. This is Steve Rhodes. This is TFNN. Right.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 100 or so. S&P down 13. Composite off 39. Russell's off 1.5 right now. We only took a look at Netflix out here. Let's go take a look at a couple of other equities. Let's go take a look at, let's see, what do we got percentage-wise here to the downside? Baker Hughes, BHI. Let's go take a look at it. It's off about 10% this morning, down $5 and change. It's a daily chart that we are looking at here. So as we pull Baker Hughes, this looks pretty bad. And you're down with pretty decent volume so far, 3 million shares. It's trading below. Yeah, it's trading below a sign of strength. So this thing at Baker Hughes had a nice sign of strength out here on October the 18th, 15 million shares to the upside. And that had held even through yesterday. But that level here has failed. You've got a high volume low out here that's trading into right now. That takes you back to July 9th, 2013. Let's put this back on a weekly time frame out here. See if we get any kind of feel for what Baker Hughes may be doing. So this thing is traded all the way back price-wise, just to give you an idea. This is traded all the way back into the July of 2013 time frame. And a weekly chart and weekly basis got some pretty good volume. That sign is strike we saw on a daily basis, weekly, was 35 million shares. You're already at 28 million shares here, and you are just below that. We'll see if it finds support. If it's going to find support, it's going to do it right here. If it does not find support here at this level, that level being about 48.37, you're traded at 48.54 right now, then it's likely going to come all the way back to July of 2012. Pretty amazing. That's going to be anywhere from 47.10 to maybe around 38.79 out there. BHI is the ticker symbol, Baker Hughes, trading down about 10%. You've got Aspirion Therapeutics. Now, that's off 15% of this morning. That's down $3.50. Oh, man, this does not look good. So this thing, I don't know, what did they do? Looks like they had a public offering. Maybe stock offering. So let's just stay away from that. Let's take a look at percentage-wise. Just looking for any big things to the downside other than Netflix percentage-wise out here. Not really a ton from a percentage standpoint. Let's go check in on LinkedIn, see what LNKD is doing out here. If we take a look at LinkedIn, again, we're still on the weekly charts out here. Now, I'll switch it back over to a daily for you. But LinkedIn so far is just pulling back into a sign of strength with some light volume. LNKD on a weekly basis had a nice sign of strength out here the weekend of July 28, 22 million shares to the upside. You've done 4.7 million shares so far this week. Let's flip this over to a daily basis and see what LinkedIn is doing out here. See what where that sign of strength. Okay, how about that? So as you take a look at LinkedIn, it did the 1 to 2 A to B equals C to the upside almost exactly, 231.49. It's done what it's supposed to do, which is pull back, and it's been pulling back on light volume into the breakout. How does that work? Looks like it's also formed an A to B equals CD to the downside, perhaps. Let's go. We'll draw. Well, first let's look at the breakout session. The breakout session inside of LinkedIn that took place on August 1st, 2014. The top of that breakout session, meaning 192.56, the bottom being 186.95. The actual low today, this is a daily chart, 187.61 out here. Volume as it came back into this. Now, the breakout session had volume of 10 million shares. It came back yesterday with 1.5 million shares. The day before, 1 million shares. Today, 342,000 shares. So not enough to bust it to the downside, at least not yet. That is on the ticker symbol LNKD. Out there. Let's go see what else we've got. So it still looks pretty good for LinkedIn's stock chart. Looks pretty good out here. Well, my goodness, time flies. Folks, if you are off to start your terrific Thursday, please be safe, be happy. And I will say just thanks so much for your presence here this morning. Hopefully you'll stick around for the next hour. If not, I'll see you bright and early tomorrow morning. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.